Well, it's the start of spring. Is the market heating up? You bet, it's getting hotter and hotter. I'm Justin Miller with the Chong Miller Group, and this is the March 2021 residential real estate market update for the Las Vegas Valley, where we look at single-family resale home statistics for the preceding month. So before I get started, I want to just mention two short notes. One is that, as I alluded to last month, we have experienced significant growth here at the Chong Miller Group. And so we have hired, and she has started, our transaction manager, Rebecca Cruz. I hope to have a video of me interviewing her within the next week or two. So you'll get to meet Rebecca. And of course, if you are doing work with us, you'll be interacting with Rebecca as well as with me and Jason. All right. The second thing is, last month I mentioned a newsletter. We have a newsletter forthcoming. I apologize that that newsletter did not actually go out last month as I was hoping with our inaugural issue. It is forthcoming. There's been some other important issues that I've been needing to deal with to accommodate growth in the business. And so the newsletter has been a little bit delayed. We'll start the inaugural issue hopefully this month, but I'm not promising. Certainly by April, so we'll start the second quarter of 2021 with our newsletter. All right, so let's go ahead and get right into the statistics and talk about the February 2021 numbers, Las Vegas residential resale single-family homes. So the first and maybe most interesting statistic is price. Median price in February, at the end of February 2021, reached $350,000. This is a new high in nominal dollars. You can go back and look at previous videos to understand in real dollars, if we inflate dollars from the past. This is not as high as we were in 2006, but this is a new nominal high in the marketplace. This number is actually up 3% month over month, so relative to the end of January 2021. And this number is up 12.2% year over year, so comparing to the end of February 2020. All right, now remember, February 2020 was a pre-pandemic market. And so when we're making these comparisons, we're comparing to actually what had been a very strong February last year. Last year, 2020, had started out actually looking like it was going to be the year in which prices would break records, and they did. It was a year that started out looking like home sales were going to be up strongly. Year over year for the entirety of 2020, home sales were actually up, even though we'd had a couple very weak months last year. So 2020 overall was a very strong year, and it started that way in January and February. So year over year comparisons are not easy right now. In other words, we're comparing to a strong time. Well, this is particularly interesting when we look at sold units. So in February of 2021, we had 2,606 sold single-family resale houses reported in the MLS. So that's an interesting number, but let's compare it to both last month and last year, or rather the previous month and previous year. So that's up 5.1% month on month relative to 2,498. In January of 2021, it's up 13.4% from the 2,299 in the very strong month of February 2020. So we're really entering the spring market here with very strong sales. We're up from January, which was a very decent month, and we're up 13.4% from the strong February of last year. Well, what about inventory? Homes for sale. So homes for sale, the inventory that exists in the data set, is a really important number. And I had been mentioning last month, in fact, for the past several months, the inventory has been very tightly constrained, and that it's going to start impacting the unit sales, the number of homes that can be sold in a particular month, because as inventory comes down, the number of sales that take place within a month is not going to be able to exceed what actually exists for sale. So as inventory gets tighter and tighter, number of homes for sale gets smaller and smaller, we're going to start to see an impact on the number of houses that actually sell in a particular month. We've not seen that just yet. As I mentioned, last month we had 2,606 sales that closed, homes that sold, up 5.1% from the prior month. But inventory, houses sitting for sale at the end of February 2021, 2,540. That's actually 66 houses fewer than sold the prior month are sitting there in inventory right now. That inventory is down 27.4% from where we ended January of 2021. We are eating through the inventory that exists in the marketplace. And we'll talk about new listings, new inventory that comes into the market, because that obviously is really important to us. But inventory that's sitting there, we're chewing through that. We're down 60.3% year over year. We ended February of 2020 pre-pandemic. We ended February of 2020 with 6,403 homes for sale. We're at 2,540 right now. This is 60% below normal for this time of year, actually. This is the lowest number of houses for sale in the digital MLS database. Going back through the whole history of the digital MLS database. This is tiny. This is a small number. It's smaller than the number of houses that actually sold in February. Well, what about new listings? Fortunately, in the spring, we start to see new listings. And we actually had a decent number, a healthy number of new listings come into the market in February. We had 3,040 new listings enter into the MLS. That's actually up 7.5% from the number that we had come into the market in January of 2021, 2,827. Now remember, January tends to be the lowest number of new houses, or second lowest number of new houses coming into inventory. And so we're up seasonally from that 7.5%. We are down though from what we saw come into the market in February of 2020. We're down 3.4% from 3,146 entering the market last year in February. So we've had 3,040 enter the market this year. But at the same time that houses, we could think about inventory as sort of the level of a lake, if you will. And so inventory is at some particular level, and it rises as new listings come into the marketplace, and it falls as new contracts are written and as sales take place. So we know that the inventory at 2,540 was in some manner extremely depleted by the 2,606 sales that took place. We have 3,040 new homes coming into the market. But remember, sales pick up seasonally at this time of year as well. We have 3,452 pending home sales. That means houses that have contracts on them that are listed in the MLS right now as under contract. So we have fewer new homes coming into the market than we have contracts that are written on existing homes. This is getting to be a smaller and smaller and smaller inventory. We're starting to look like Lake Mead, right? We're starting to get those wide bathtub rings around the lake as the water level falls further and further. We really have an inventory issue here in the Las Vegas Valley right now. So new listings have come up as we'd expect seasonally. New sales, pending sales, have gone up as we would expect seasonally, but they've exceeded by 412 the number of new houses coming into the market, is new contracts written for houses to leave the market. And inventory last year, or rather last month, was actually 56 units below what we had closed last month. We're looking at historically low inventory right now, and it's getting tighter. We're looking at interest rates that have started to bounce. As I suggested, interest rates are going to stay very low through, according to the Fed, through 2023, possibly longer, maybe a little bit less long, but probably not. Interest rates, however, move around. They fluctuate because bonds, mortgage bonds and treasury bonds get traded in the market, and people speculate and make investments on those bond products. And as demand for those products goes up, the price of those bonds goes up. Well, interest rates are directly inversely correlated to price of bonds. So as bond prices go higher, interest rates go lower. Okay. Over the past week or 2 weeks, we've started to see some less interest in the purchase of bonds, meaning bond prices have gone down a little bit, and that means that interest rates have gone up a little bit. Is this the start of a change in trend? I don't think so. One of the statements for traders in the bond market is never fight the Fed. The Fed has astoundingly deep pockets. They effectively control the money supply. And so if the Fed wants to inflate the economy by buying up mortgage debt, which they've been doing, or buying other debt, government debt, which they've been doing, they can do so at massive quantities. And what that means is the Fed always has the ability to come back in and change interest rates. And if interest rates start going up, as they have over the past, actually it's about 2 weeks, the Fed can step back in, as they've indicated they're going to, and push rates back down. Why would the Fed want to have interest rates lower? Because the economy overall is still in a recessionary phase. We've not recovered full employment from last year's shutting down. There are some parts of the market that are doing very well, the overall economy that are doing very well, such as housing, but there are other parts of the economy that are not doing well. And there are beliefs that consumers, including real estate purchasers, are very price sensitive with regard to interest rates right now. And so the Fed will continue to keep interest rates low. And every time we see one of these fluctuations higher on interest rates, the Fed will step back in, start buying up more mortgage debt and other types of debt instruments, bonds, and that will increase prices on those bond items, which will cause interest rates to come back down. So interest rates, while they've bounced, they're not going higher. And by the way, an interesting truism in the real estate market, while low interest rates stimulate demand, a perceived bounce in interest rates where it appears that interest rates are starting to go up actually is also highly stimulative of demand, as some people rush to get into the market to lock in low interest rates before they go too high. So we see this historically every time interest rates start to go up. We see actually large increases in the number of people who are looking to lock in mortgage rates. So right now, we should think about this as a blip in the mortgage market. Rates have come up from about 2.75 to about 3.25 on average, and they'll in reality they'll be going back down. We'll be hovering around the 3% level for the next realistically 2 years. We could go lower, right? At the same time, rates can jump slightly higher. They can also plunge slightly lower, and so we could see rates back down at 2.25 sometime during the summer. I'm not making that specific prediction, but rather I am predicting they'll bounce around a center line of about 3% over the next couple of years. So with interest rates at these effectively historically low levels, right? Over any given span of time, a 3% interest rate is in historically low level, even though the rates have bounced below that a little bit for short periods of time over the past several months. Combined with historically low inventory, what are prices doing? Prices are going up, as I said at the beginning of the video. And I expect that we're going to see prices continue to go up. As I predicted last November with the 2021 market forecast video, I see buyers materializing before I see sellers materializing in this market. And that's exactly what's been going on. We do see sellers starting to come back in now, which is excellent. But we're seeing more buyers still in this market than there are sellers. And that means we're just going to see higher and higher pricing pressures. And we are seeing them in the market. We know exactly what that means. Prices will go up because there's a lack of inventory. So if you're a buyer, know this. You really need to have somebody on your side, your professional agent who's looking out for your best interest to help you get into a transaction and to get through that transaction. There are some minefields out there going through the transaction process right now, but it's also really hard to even get into contract. We've been doing extremely well for our clients, getting them into contracts and through the contract process. And by the way, it's not just simply, and it's probably not at all, just making high offers. We, on the listing side, have turned down offers that were higher than we thought would draw an appropriate appraisal. So there are a bunch of things that an agent who really understands what they're doing can do to help you get into a contract. And on the buy side, that's astoundingly important right now. We are seeing across the entire price spectrum right now, multiple offers. We've got a client on a $200,000 condo. We've got a client on a $1.5 million house. Multiple offers on both of those, as well as all of our clients who are in between on the price spectrum. Right now, there are more buyers than there are properties to buy, and property that is priced approximately right and that shows well is drawing multiple offers regardless of the price point in the market. Similarly, if you're a seller, you need to be represented by somebody who understands what the market is to allow you to get into an appropriate contract that's actually going to be able to close. That means evaluating what the market is to make sure you're not demanding prices and then not taking prices that are just not actually going to be able to close in this marketplace. It also means being able to evaluate the quality of the buyer who's showing up and whether or not they've got the capacity to engage in the transaction that's being proposed. So please reach out to a qualified real estate agent to help you through this process. At the Chong Miller Group, we help people buy and sell homes. If you're a buyer, there's really almost no cost to use us. The seller's paying the commissions. If you're a seller, obviously you're paying the commissions, and so there's a cost, but you're paying a commission to any agent. Make sure you're finding an agent who really understands what they're doing and is having success in this market. This is a challenging market. It's challenging for buyers, it's challenging for sellers because of the super tight inventory and the ways in which some people are trying to compete ineffectively, inappropriately in this marketplace to get into contracts. It's causing some challenges on the back end of contracts falling out, of properties going back on market, and you want to make sure that you're protected from that on either side of a transaction. A transaction that fails is bad for everybody involved. A buyer found something they really like and end up not being able to conclude a deal and have to go start over from scratch with the emotional scar. A seller who gets into contract that's not able to close suffers as well. You're sitting there in a property that you've been wanting to move for a longer period of time and going through the process maybe even multiple times You don't want to do it more than once. So give us a call. I'm Justin Miller with the Chong Miller Group. Please feel free to subscribe to our videos. If you find these helpful, please forward them to your neighbors and friends and colleagues who you think might be able to benefit from having a high-quality real estate team on their side. I look forward to seeing you again next month. Thank you.